Hey Ian, how are you?
Hey, great. How are you?
It's that time of the week again. Time for another edition of the Ian Cast. Are you ready?
Absolutely, as always.
All right. Last week we talked about Apple,
Yep.
and we put up a number of things, and we've got a lot of comments on last week's Ian Cast about Apple. And many people in are really taking issue. Really, no one's taking issue with what we presented. No one's
Right.
contradicting really what we're saying. Some of the issues are coming up, which you know what I mean. Our issue really, like in terms of Apple, is that number one, Apple is such a big part of all of the indices that any day, like when we were talking earlier, we just had our investment call this morning, the reason why the Nasdaq is down is because of Apple and Microsoft.
Yep.
Yeah, I mean, and that's true for the Dow, that's true for the Nasdaq 100, it's true for the Nasdaq Composite. And so Apple being like this kind of like weight on like all these indices is an issue for really these indices, which are like kind of like now defined by the fact that they're dominated by America 1.0 companies that are in various stages of decline.
Yeah, exactly. So, as of now, and this is right before the market closes on Thursday, Apple is down, I think at this point, around 30%, or it's down from 138 to like 112. So, what's that, like 20%?
It's about
So,
20%. I looked
yeah.
this up before. So I think at the low point since the split peak, it was down about 23%. And
Yeah.
since many people are, you know, are scorekeeping as Tesla versus Apple, Tesla is also down in the same sort of
Yeah.
range. The big difference is that Tesla is up, you know, in the time since its IPO, which came out in 2010, is up a lot more than Apple in the same time frame. So a
Yeah.
decline is sort of more meaningful to somebody that bought Apple in like the last year or something like that, or in the last few months, which is probably when most people came in, because there
Yep.
was that parabolic run in Apple, which then lifted the S&P 500 and all of these other indices up, and the volatility that you're seeing, really, like I mean, I have no idea what the mainstream financial media is really talking about. And I mean, do you know understand? Because it's so
Yeah.
clear to us when we look at it, it's like what is driving the indices to move down, but they always like make it like as if it's about something else.
Yeah, so I've even seen stuff about like reinstating lockdowns and stuff as the reason. It's like, no, it's because the money is flowing out of the big stocks. That's pretty much, I mean, that pretty much sums it up. And yeah, Tesla has sold off a little bit too, but they came all the way back up. And then we've seen some profit taking after Battery Day, which was yesterday. What it was yesterday, right? I'm getting my days all mixed up.
Battery Day, I
Or
believe,
was the day
was actually a couple of days ago,
Yeah,
and I live tweeted through some of that, and it
yeah,
was super interesting. And coming back to again, um, you know, there's really three issues here. One is the weight of Apple, Microsoft, in particular, which are, in my judgment, America 1.0 companies. Microsoft
yeah,
may have a little smidge of America 2.0 left in it. However, it's so dominated still by its Windows and its PC business that
yeah,
to me, it's still very much America 1.0. So there's the issue of the domination of the big indices by America 1.0 companies, in particular Apple and Microsoft. Then there's the issue of the fact that Apple has taken so much of its money to pursue something that, in my judgment, in our judgment, is really directly contradictory to its mission as a company to innovate, to delight its customers by making devices that that innovate really on the human experience, to make tools that people love, and then there's the third issue of the fact that Tesla is still innovating, which if you watch the Battery Day, I mean, it is incredible. I mean, what this company is doing, like on how
right.
many fronts they're moving simultaneously.
Yeah, and I even saw some, hit pieces on Tesla after the Battery Day. They were like, "It's not coming out for 3 years." The new battery he was talking about. It's like, I mean, what are you trying to discredit everything that they've already done? And again, as we've said many, many times, the market prices things in advance. They know that this trend is not going to be stopped. They know that electric cars are going to keep getting cheaper. The battery technology is going to keep getting better. And the two are going to combine to really continue to give Tesla a huge market lead in the electric vehicle segment, because they were the first ones to really go all in on electric vehicles and do it successfully. And they got into the market really before anyone else. And as a result, they have, basically an EV monopoly at this point in the United States.
Right. Yeah. I mean, so I watched Battery Day, and you can contrast that then to Apple's product revelation day, where so Tesla announced a new battery, which is also a new battery technology, a significant jump in the ability to produce those batteries at a cheaper cost. And then in addition to that, a third product, a $25,000 EV, to really accelerate the transition to sustainable energy, which is their part of their mission.
Yeah.
And so the new battery also facilitates their battery business itself. And then prior to this, really, I think previous year, they also have had a number of breakthroughs in their solar business.
Yeah.
So, and then you contrast that to Apple and what it has announced recently, which is that it is going to have slightly better integration. The Apple Watch is going to be like incrementally better.
Yeah.
Incrementally better.
Yeah.
The phones are going to be.
Better camera. That's about it. I don't know.
I think that might be debatable. The phones have only been rumored and leaked out so far. So, I keep pretty close track on all this, but there's nothing that really jumps that technology forward so as to make something in human sort of, experience more convenient, more easy, increases your ability. Like the original iPhone, it jumped our ability to communicate in so many different ways, whether it be on the phone, by text. Then they essentially created a new industry, the app industry, which did not exist. The software industry existed. The app industry did not exist. Apple created that. Yep. Where is the jump? It's been 13 years. And in the meantime, really, they had the lead, would have had the lead in terms of lithium ion batteries when they started the iPhone, right, Ian?
Yeah, absolutely. Yeah, of course, as we always mention, they're using that money that they formerly used to innovate just to buy all their stock back.
And they were also the leader in artificial intelligence with Siri, and then also with voice assistants with Siri.
Yep.
So they have lost the lead in so many different things that if they had invested with the idea that, hey, some of these would take 5-7 years to play out, today, they would be introducing groundbreaking new devices with a Siri that blew Google Assistant away and blew Alexa away for sure. And they probably would have an Apple car that competed with Tesla.
Yeah, exactly. And then, of course, Alexa kind of replaced that. And now Alexa is the big thing, of course, with voice command. And then Tesla is doing basically what Apple was doing. They're kind of merging, vehicles with technology in the sense that, it's basically a computer on wheels, the Teslas are. And they're also, of course, developing better energy storage, products, not even just in cars. They have the solar roofs, which, as you mentioned, their solar business is really starting to quickly develop even further. And a lot of that is due to solar roofs. And they're the first company to really make that a big thing. And they're really ramping up that part of their business. And they're expecting to make like millions of dollars a week by the end of this year with that.
Right. And you can see, you brought up the similarity between Apple and Tesla, which is that, so Tesla is starting to integrate between the Powerwall, the solar roof, and then the car, so as to be able to optimize, obviously, the collection of energy, its movement, its storage, and then its use. And you can see that elegance, which really until now, no other company other than Apple really saw that sort of ecosystem kind of formation where obviously they had the Macs that were there, and then there were iPods and the iPhones, iPads, and they all integrated together using the App Store in many kinds of ways, and that continuity, which is what delivers on the experience. However, they've taken it nowhere really for many years now.
Yeah, I know. It's kind of bizarre that they're using all that money just to buy their stock back now.
Right. I mean, and it's, we've calculated, and please go check out our video from last week, which a lot of people take issue with, our stance on Apple. I've gotten quite a bit of heat on Twitter as well for it. And you can see by the comments on last week's video that there are a lot of unhappy people with our stance on Apple, Ian.
Right. I understand. I mean, it had $2.3 trillion. Chances of not offending a shareholder of Apple is like zero. So,
well, I think the issue is as well, which is that prior to the split, and both Tesla and Apple somehow announced splits at about the same time.
Yeah,
like I think a day apart. Yeah, okay, it was the same day.
The actual split. Yeah.
Yeah, and so for sure, with any really popular company, and Tesla is a popular company, and Apple is a popular company, both popular stocks owned by, there's probably some commonality. However, given the level of antagonism that's being shown in the comments from last week, I think that perhaps Tesla stock owners and Apple stock owners are quite different populations. What do you think, Ian?
I would say so. I think a lot of the Tesla shareholders are probably younger, because I know at least the iPod was a little bit before my time, at least the originals, like the Mini and stuff like that. I mean, people grew up with that, and I would say that the people that are, a little bit older and grew up and saw what Steve Jobs did are more likely to be Apple shareholders and to say that, they're still innovating, they're still that great company that they were before, and the stock, the performance of the stock since like 2000 is pretty insane. And it's something that people like to use as like a metric of success for the company. And like we've said, they have been extremely successful, but that's starting to kind of wane out a little bit.
Right. And the history of companies that forget that unless you're actually making an effort to improve things and innovate, innovation never happens on its own. These are, I mean, Apple went from near bankruptcy in the late 1990s, was actually saved by Microsoft that put in $250 million, and then went on to develop a series of hit products, the iMac, which was then followed by the iPod, which was then followed by, and the iPod was a huge hit in its time, a series of them. Then came the iPhone, which is still the basis now of Apple's value. Then there was the iPad, and really since then there's marginal products. The watch is really a marginal product, and the services business, in my judgment, I've said that's a bogus business that they manufactured, they created to trap people into their platform.
Exactly. Yeah. So if people stop buying as many iPhones or iPads or iWatches, the service business is going to do bad too. So I don't get it.
Yeah, and our bigger issue is like, that's fine. Hey, we are definitively not trying to beat down an Apple. We're just saying, like, listen, you can go back and look at companies that were very innovative. Many people, I don't know, do you know, Ian, what was the standard before the iPhone came out? What was the standard phone, if you can remember?
Oh, man. That's like flip phone, Motorola Razr, maybe?
It was the BlackBerry.
BlackBerry, that's right.
It's the BlackBerry. I mean, they used to call it Crackberry because people thought it was so addictive, right? And it had a little keyboard. People loved it, and it was a status symbol. Okay, it never got to the point of the iPhone. I will give it that. Nonetheless, it was incredibly something that people felt that they would never give up. Many people loved that keyboard. And where is BlackBerry today?
Yeah, they totally changed their business around. I'm not even sure what they're doing anymore.
Right. So, however, it was unthinkable that Nokia was like the leader in the early 2000s. BlackBerry took over from them. They never responded in real time to the innovation that was represented by the iPhone. My point is that many people think that because Apple is the leader. It's always going to continue leader. However, innovation history is full of companies that once completely dominated and then disappeared. Polaroid is an example of one.
Right.
Yeah, and that happened. Polaroid
Yeah,
cameras were as like, like the iPhone, really.
yeah, and I think it's getting even harder and harder to, keep adapting because technology is improving at such a quick rate now that the life cycle, if you don't adapt, is getting smaller and smaller. So if you're not always, adapting and improving your products and foreseeing what people are going to want in the near future or even years ahead, you're not going to be around very long at this point.
Yeah, and one thing that's unique is this domination of the S&P 500 cap weighted index, which so many people are invested in. And of course, people buy and sell on the basis of obviously futures trading that happens in the S&P 500, which is used for hedging. And Apple and Microsoft dominate it so much that if both of these companies go into decline, which is in our judgment happening, people that are invested in their pension funds, retirement funds, and the S&P 500 for sure are going to face some number of years where they have poor returns.
Right. Yeah. It's but as that happens though, the America 2.0 companies, the ones that are going to be the leaders, are getting bigger weights in the S&P 500. So that's going to kind of stop the blow a little bit to the big indices.
You're right. And then this is where we have brought up the fact that if you track both the S&P 500 equal weighted index, which by its very nature, which would have Apple as an equal weight to any other company. So if you've got 500 companies in the S&P 500, so every company would have a 0.25 weighting. Oh, am I right about that? 500?
Yeah.
Yeah. Okay. Every company would have equal weighting. I'm wrong about that. Every company would have the same exact weight, so irrespective of market cap. So obviously that equal weighted index, you can see the impact on that index when Apple and Microsoft are doing poorly. That actually starts to move up. And Ian and I believe that you're actually going to see the equal weighted index first. It's a small outperformance now, Ian. However, I think give it 1, 2, 3 years, it's going to be enormous.
Yeah, exactly. And we've already kind of seen a preview with that from the NASDAQ because there's so many companies in the NASDAQ composite that it gives those smaller companies kind of a bigger chance than even the NASDAQ 100, where Apple is a very dominant company. And the NASDAQ, if you look at that next to the S&P 500, that's like blowing it away over the past couple of years. So the companies that are fueling that are the cloud stocks, the biotech stocks, the ones that are the most cutting edge technology that are in the highest demand in the market, and they're gradually getting a bigger weight in the S&P and in the NASDAQ 100 and in the indices like that.
And if you were to guess, Ian, so which industry, let's say, looking out 3 years from now, will have sucked the most market cap out of Apple? If you were to guess.
That's tough. Probably, I would say some sort of something within biotech, probably diagnostics, if I had to guess.
Right. I mean, we have seen a huge move, a huge shift. I mean, first, there was a huge deal where Gilead Sciences bought for $21 billion a biotech company called Immunomedics. $21 billion, Ian. 21 billion. And then that was followed by Illumina, which is a instrument maker, makes sequencers. They bought a company that they actually helped seed called Grail, which actually has a phenomenal test for cancer. And they're paying $8 billion for that company. So there's big money that's pushing into this world. I mean, it's biotech, it's molecular diagnostics, it's testing. And that's another world where there's also an enormous shift underway where the market capitalization right now is in the Mercks and Pfizer's, very America 1.0 pharmaceutical companies, and is now transitioning over to this class of different companies.
Yeah, exactly. And we saw kind of that happen in the Dow, where Pfizer got taken out and replaced with Amgen, which is one of the bigger and older biotech companies around.
Right. I mean, the committee that runs the Dow tends to be kind of late in terms of putting stocks into the portfolio. And
Yeah.
I have kind of mentioned this to our colleague, Patrick, amazing colleague, Patrick, that it would be kind of cool to have a, a version of the Dow that actually is representative of America 2.0. And we talked about this, about sort of populating companies, and we came up with a bunch of names. And we're actually going to do this. And we think what we're going to do, well, it's going to take us a little bit of time. We're going to put together an index of 30 names. We can't call it the Dow because then Dow will come and sue us.
Yeah.
So I think we'll call it, what do you think? We'll call it the Ian Cast Index.
Yeah. I squared.
No, I think we're going to call it the America 2.0 30.
Yeah. Yeah. Sounds good to me.
Yeah, America 2.0. So, okay, you go with your three that you think would go into the America 2.0. We'll try and do this as the Incast comes through. And if there's generally pick bigger companies, and if it's in one of our services, and we don't want people to get in, avoid those ones, but go with three that you think should be in America 2.0, the America 2.0 30 index.
Yeah. So obviously Tesla is going to be in there. I know that's a shocker, but Tesla would be, high on the list.
Right.
Another one probably would be NVIDIA, because they are, they're a semiconductor company, but they're also huge into cloud computing, and they're kind of just dominating both of those industries. And then Uber, of course, is, the future of transportation. They've got, of course, their main business that everybody knows, which is like the ride hailing, but they bought Postmates, which is delivery of not just food, but really anything. And that they have that on top of Uber Eats, which was already one of the dominant delivery kind of businesses. And we've talked about this a little bit from time to time, but they are also, getting into air taxis and autonomous cars. And they're really, the forerunners of that. They're the only ones really talking about that at this point. And they have the scale, enough scale to really bring that to fruition.
Right. I mean, people have forgotten that they have actually very early on, when they were a private company, bought the entire robotics division of, I believe it's Carnegie Mellon, and turned it into a division of Uber. And they were the leading sort of developer of any number of robotic and autonomous technologies. That's all sitting at Uber and under development, and is going to come out as time unfolds. And it'll be something where it's first introduced one place, and then increasingly, just like their app was introduced in a few cities, and suddenly it was all over the world.
Yeah, exactly.
Yeah.
Yep.
And if I were to put, so Ian's got three. So I think those three are solid. And for this week, we'll just let that be. When you start running out of companies, I'm going to chip mine in. I agree with all those three companies. So I'm going to put them in. So that's three that's in there. There's many others that seem pretty obvious. They'll have to go through our portfolios. We definitely want to make one thing clear. Many people are going to say, hey, Paul and Ian, well, if Apple's going to go down, Microsoft's going down, people are going to just go sell all stocks. And so all stocks, nonetheless, this week, we have definitely seen a kind of pattern where, those big ones go down, and then there's like a bid that comes in for any number of other stocks, pushing it up.
Yeah, and it's crazy, the split between America 1.0 and America 2.0 that you can see on like a daily basis. Since the market started going down a few weeks ago, there will be buying like later in the day where, biotech is up, cloud stocks are up, e-commerce is up. There is a very interesting kind of split going on right now, where Apple is losing share and all the other big companies, America 1.0 companies, are losing share. And at the same time, the other smaller companies, America 2.0 companies, are gaining share at a faster rate than they would have otherwise.
Right. And once this recovery, this post-pandemic recovery really starts to take off, and you have industrials starting to also power the recovery, we have to make things. So the industrials have to come through. And then, you tack on the productivity of like using everything from Internet of Things, artificial intelligence, blockchain, all the big mega trends, 3D printers, all of these things, emergence of space. I mean, it's in 2 or 3 years, what today is somewhat controversial perhaps, is going to be like the way people look at retail.
Yeah.
Yeah, I mean, on-premise retail, on-premise retail.
I know, yeah, it's all coming about so fast, and in part it is due to everything with the pandemic, with the lockdowns. Adoption of technology has just soared, and it is becoming normalized very quickly. People are getting used to it because they're seeing that it's a better way of doing things. It's way more efficient, it's cheaper and more productive at the same time. So yeah, it's quickly being integrated into pretty much everything in every industry.
Right. We've seen an acceleration pretty much and the adoption of pretty much every technology that represents America 2.0 across the board. And we expect that to happen. And because of that, we are bullish, optimistic, positive, BOP on America 2.0 stocks. We believe that the longer you stay in America 1.0 stocks, and there are a number of them that people, Ian, depend on for dividends, or else they have an attachment to them,
Right.
because they like the company, they like the product or service. It's increasingly going to look like what GE looks like, what Macy's looks like, and then God forbid, what Sears and J.C. Penney, looked like, because they're kind of gone away.
Yeah, exactly. And it's crazy how fast that can happen. I mean, Macy's was like a huge, huge company just a few years ago. I think their peak was in like 2014 or 2015. And now, the stock is down, I don't know, like 80, 90%. It can happen in the matter of, a couple of years or even sometimes quicker, like with, Exxon, which was also just taken out of the Dow. That was a huge company just like a year or two ago.
Right. America 2.0 is definitely in ascendance,
Yeah.
definitely in ascendance and accelerating in ascendance. And it will become very, very clear. Right now, it may seem a little controversial. It may seem like we're just sort of talking our own game, talking our own book. Nonetheless, go and look at what is rising. Go and look at what matters. And the stocks that are really, really getting, whether in terms of the actual growth that's happening, the adoption of technology, it's America 2.0 stocks. So there's never been a better time to actually be into America 2.0 stocks. We've got a number of videos on our channel on sort of mini portfolios. Go check those out. We have stuff, we have sticks. And then we also tell you, if you are interested in actual individual stock names that you want to invest in, consider subscribing to Profits Unlimited, which is our flagship newsletter at Bold Profits. We also have a free e-letter for which there will be a link. And there's also a link for a Profits Unlimited presentation for America 2.0, where I kind of lay out this entire scenario. Alrighty, and we've done this for a little bit. So I've always dreamed truthfully of putting Bitcoin into the Dow. I know that's very unlikely, but it's a good transition for us to start talking about Bitcoin. So you put something up in our Slack chat talking about how much Bitcoin Grayscale is buying. It's a mind-blowing number. It's like genuinely, like I looked at it and I was like, there's just no way. And obviously Bitcoin is still at 10,200, 10,300. And I'm just thinking somebody has to be going short on this for them to be delivering this to Grayscale. There's going to be one of these days or weeks, Bitcoin is just going to go from 10,200 to like 15 and then 20 and then 30 and 40 and 50, like in the space of like no time.
Yeah, exactly. I've been telling people that it reminds me of Tesla, like when it was like $200 a share, but way back pre-split and everything. And it was like, this makes really literally no sense. And then, 15 months later, it was at 2,500. So things can change extremely fast. And Bitcoin, you mentioned Grayscale. They've bought over 70% of all newly mined Bitcoin since the halving. And of course, the halving was the event where all the new Bitcoin were mined. So it was the supply that was mined every day essentially was cut in half. So there were 12, or there were, it was 12 and a half, right? That were mined every day.
That's correct. Yeah, I think that's correct. Yeah.
In every block or whatever. And then it got cut in half. So there's a huge cut in supply.
Right.
Grayscale is taking up almost all of that. So essentially there hasn't been any Bitcoin added since May to the market. And on top of that, the amount of Bitcoin that's sitting on exchanges has come down like dramatically. I think it's down to like 13% of all Bitcoin in circulation are on the traditional exchanges. All of the other ones, or at least most of them, are being held. I think it's over 60% have been held for at least a year, not even moved. So people are holding on strong to Bitcoin. And yeah, this price going sideways stuff is really, it's unlimited time for sure. It's only a matter of time. If this continues, these trends continue, it's going to absolutely blow up.
Yeah, what you said is 100% right, which is that when you look at Bitcoin, it does look like Tesla before Tesla just rocketed higher this year, which is that it sat in this range for a long time. And then obviously people continue to own it. And it has a similar kind of like the folks that own Tesla believe in Tesla and they own it. And Bitcoin has the same kind of investor base.
Yeah, absolutely. Yeah. Undoubtedly, people are, holding it off exchanges. They're making it as private and as secure as possible because, they know that like there's a ton of money that's going to come into this, if nothing else than just from gold alone, because gold's a $10 trillion market. And we've seen the price of that come down recently too. So a lot of that money is going to eventually be put into Bitcoin, and Bitcoin right now is, I think, 170 billion. So yeah, it's a 50 times Bitcoin is the market cap of gold about. So tons of room for Bitcoin to go up as that money flows from things like gold.
Yeah, 100% right. And we completely agree. And just so everyone knows, we have a prediction for Bitcoin to hit 50,000 this year. That's right, the year 2020, not next year, this year. And many people have said that we are delusional. Nonetheless, we are going to stick with this prediction. And I believe actually the next peak is going to be in the multiple hundreds of thousands. So at 200, 250,000, and that it's definitely going to go out to 2023, so maybe something past that. But nonetheless, the next peak is going to be so much higher that to endure through this volatility is, in our judgment, a no-brainer. And we do have some participation using the Grayscale Trust in Profits Unlimited, which is one reason why we do talk about this on the Iancast, because somebody asked a question as to why we talk about Bitcoin in the Iancast. All right, we're going to skip cannabis today since we spent a lot of time on the market and Tesla and Apple and all that stuff. So why don't we close this? Anything else you want to cover, Ian, before we close off this edition of the Iancast?
I don't think so. I think we pretty much nailed everything.
All right, so you go first and I will go next.
All right, everybody, thank you so much for watching. I hope everybody has a great, safe weekend.
And this is Paul saying bye.